Hello and welcome to Ticker Tapes. Today, we're taking a look at the world of high-growth stocks. Last week, we reported that high-growth investors had woken up to the fact that inflation was continuing to move higher rather than receding as had been anticipated. This week, they had another rude awakening in the shape of a 75 basis point rise in interest rates from the Federal Reserve. This was only the fourth occasion in the last 40 years that the U.S. central bank felt the need to raise rates so dramatically. What's more, the bank did not explicitly rule out raising rates by a large margin again in the near future. As we have noted many times, the combination of rising inflation and interest rates is not one in which high-growth stocks tend to prosper. The Nasdaq 100 fell by more than 4% last Thursday following the move by the Federal Reserve Open Markets Committee. This was the second time in 7 days that the Nasdaq 100 had fallen by 4% or more, though thanks to gains in 3 out of the 5 sessions, the index finished down by just 4.79% on the week, though that performance could hardly be viewed as a vote of confidence. RPG, the Invesco Pure Growth ETF, fell by 7.49% last week, and unlike the Nasdaq 100 and composite indices, it was reluctant to rally into the weekend, adding just 0.51% in Friday's trade. None of the top 10 holdings in the S&P Pure Growth Index made gains last week, and energy-related components in the growth stock benchmark posted big losses. Devon Energy and Diamondback Energy fell by 21.6% and 21.35% respectively. Tesla fell by 6.66% on the week, not helped by reports that the EV manufacturer was laying off staff, with both salaried workers and those paid by the hour being affected. The firm's sales and delivery team were thought to have borne the bulk of the cuts, which is perhaps surprising given that Tesla is in the midst of the end-of-quarter deliveries, a period that CEO Elon Musk recently told employees would be nutty. Chipmaker Nvidia was another casualty, down by 6.45%, a move which brings the total losses in the stock year-to-date to 46%. Nvidia's GPU chips famously power the machines used by cryptocurrency miners. The graphics processing units have exactly the right characteristics for the complex code cracking that unearthing new coins requires. However, with Bitcoin down by 56% year-to-date and trading as low as $17,614 per coin at the weekend, the economics of energy-intensive Bitcoin mining are becoming far less attractive to miners who are unlikely to be in a rush to upgrade their equipment as a result. Biotech names were a rare exception last week, with SGEN up by 18.69%, whilst Biogen and Regeneron added 5.33% and 4.35% respectively. The reason for that jump? Well, speculation that drug giant Merck is considering a bid for SGEN. In fact, the Wall Street Journal reported that Merck was one of a number of potential suitors for the company.